Have you ever wondered why crypto is still such a hot topic, even after all the drama, FUD, rug pulls, and crashes that have repeatedly turned people off? But strangely enough, more and more people are getting seriously involved. Not just retail investors, but also global financial giants. Even countries. The question is, why do they still believe? And can crypto still produce many new billionaires, even trillionaires? You might think, it's probably too late now. BTC is already in the hundreds of millions, and the market is already crowded. But on the other hand, there's an intriguing fact. The current crypto market capitalization hasn't even reached 1/10 of the gold market. And altcoins, many are still untouched by widespread adoption. This means we're not too late. We might just be getting started. Like the internet in 1998, the boom hasn't arrived yet. And for those who are patient and discerning and reading the trends, crypto could be the vehicle to something big. But before we dive too deep, I want to issue a warning first. This podcast is not financial advice. All information shared here is educational and personal opinion. It is not an invitation to buy specific assets. Remember, investing involves risks. So always do your own research and adjust it to your own risk profile. We'll have a lengthy discussion about why crypto still has huge potential to create future trillionaires. And the most exciting part, these opportunities aren't just for insiders, but for anyone who's patient enough and willing to learn. All right, ready? Let's start with the first reason, the relatively small market capitalization of crypto. Chapter 1. Crypto market capitalization is still relatively small. Huge opportunities in an underserved market. Imagine the global financial world as a vast ocean. There are large ships such as the U.S. stock market, the global property market, commodities such as gold and oil, and government bonds. All of these have extraordinary value, trillions of dollars. Now let's zoom in on a small part of that ocean, crypto. Compared to the vast ocean of the global economy, crypto is still like a small lake that's just starting to get busy. Currently, the total market capitalization of all crypto assets is around $2 to $2.5 trillion. Does that sound big? Yes, for us retail investors, that's an impressive number. But when compared to the total value of global gold, which exceeds $14 trillion, or the global stock market, which exceeds $100 trillion, crypto is still very small. Bitcoin itself, as the king of all crypto assets, hasn't even reached half the market value of gold. Yet many analysts and blockchain technology supporters refer to Bitcoin as digital gold. Well, using simple logic, if Bitcoin is truly going to replace gold in its role as a global store of value, then its potential for growth is still very far off. We haven't even mentioned altcoins. Most altcoins in the current market have much smaller market capitalizations. Many are still below $5 billion, and many are even in the hundreds of millions. What does this mean? Any new capital influx, especially from large investors, can drive prices up very quickly and sharply. Let's use a simple analogy. Imagine there are two buckets. The first bucket is 90% full of water. The second is only 10% full. If you pour a glass of water into the nearly full bucket, the water level only rises slightly. But if you pour the same amount of water into the nearly empty bucket, the water level rises dramatically. Well, altcoins are like that empty bucket. With a small market capitalization, altcoins have greater potential for growth, though the risks are also higher. We must also be aware that blockchain technology is still in the early stages of global adoption. If we compare it to the history of the internet, crypto is currently at a stage similar to the internet in 1997 to 1999. People are still learning how it works. The infrastructure is still being built. Many projects have not yet proven themselves, but there are also some that are slowly forming the foundation for the future. Another factor is the network effect. The more people use blockchain and crypto, the more its value will grow exponentially, not linearly. Imagine if 1% of global wealth started moving into the crypto world, or 5%, or 10%. The impact could change many lives. And early adopters, like you who are listening to this, have the potential to benefit the most. However, none of this is a guarantee. This is not a risk-free game. Because a small market is easier to manipulate, more vulnerable to sharp fluctuations, and highly dependent on market sentiment. But this is precisely where the big opportunities lie. For those willing to learn, be patient, and know what they're doing. This phase could be a stepping stone to the next level of financial success. There's a reason why many future trillionaires aren't from the old world, but are born from the crypto world. Because we are witnessing history being written. And as always, history rewards those who arrive early, with knowledge, with a long-term vision, and with the patience to weather short-term storms. This is the first reason why crypto is still very likely to produce many new trillionaires. The small market capitalization is a goldmine that has yet to be fully tapped. Chapter 2. New Narratives in the Crypto World, the Engine of Unexpected Wealth. One of the most unique, and, let's be honest, most exciting things about the crypto world is that there are always new stories. Seriously, almost every cycle, there's a new narrative that can propel the price of a particular asset from zero to the moon. From a project that no one was paying attention to, it becomes the talk of the town. And from a small community on Discord, it can evolve into a global movement that creates thousands, even millions, of new winners. This is what sets crypto apart from traditional financial markets, which tend to be stagnant and rigid. Crypto is like an open experimentation arena for the future of global technology and finance. And every experiment has the potential to spark a trend, and every trend has the potential to create unimaginable wealth. We can see examples from previous cycles. In 2017, the big narrative was ICO, initial coin offering. New projects raised funds through tokens, and some of them, like Ethereum, skyrocketed. Many people became suddenly wealthy for daring to believe when few others understood. In 2020 to 2021, we witnessed the era of DeFi, decentralized finance, where dozens of protocols suddenly emerged that replicated the functions of traditional banks, but without intermediaries. Uniswap, Aave, and SushiSwap are examples of how a new narrative can propel a project from zero to a giant. Then came the NFT and metaverse narratives, which transformed how we view digital ownership. Tokens like Axie Infinity, the Sandbox, and Decentraland achieved returns of thousands of % in a short time. Recently, we've witnessed waves of Layer 2 solutions, res-taking, AI-integrated crypto, and modular blockchains opening new opportunities. Narratives like EigenLayer and AltLayer are proof that we're still in the early days, and the bigger story isn't over yet. Why does this matter? Because narratives aren't just about technology. They create emotions, communities, and momentum. And when a narrative is strong, it can drive billions of dollars into a sector in no time. Investors who can read these narratives early are like the screenwriters behind blockbuster movies. They don't just wait for trends. They study the direction of the wind before the storm of money arrives. But of course, this doesn't mean every narrative is valid. There are also fake narratives, scam projects, and empty dreams. That's why it's crucial to DIY, do your own research, understand the development team, the tokenomics, and how strong the community is. But if you're serious about learning, actively participating in discussions, and willing to invest time to understand the ecosystem, the opportunity to get in early on the right narrative is always there. And when that narrative takes off, the rewards can be life-changing. And this is the second reason why crypto is still very likely to produce many new trillionaires. Because there are always new stories, always new trends, and those who are quick enough to catch the momentum have the potential for rewards that ordinary investors don't have. Narratives are like waves. You don't have to create the waves. You just need to know when to start paddling, and don't be afraid to get wet. Chapter 3. Institutions are increasingly interested in crypto, but they are not FOMO buyers. One of the strongest signals that crypto is not yet finished is the fact that major global institutions are just starting to get involved. Yes, they are interested. Very interested, in fact. But don't imagine them jumping into the market like amateur traders who FOMO every time they see a green candle. Institutions, whether banks, pension funds, hedge funds, or public companies, play it safe, systematically, and with careful calculation. Let's look at the data first, so it's not just opinion. BlackRock, the world's largest asset management firm with over $10 trillion in AUM, officially entered crypto through a Bitcoin spot ETF. Fidelity and ARK Invest also joined the ranks, offering crypto ETFs to the public. Even Goldman Sachs, Citadel, and JP Morgan are beginning to test blockchain-based settlement systems. The question is, if they've all entered the market, doesn't that mean it's already too late? The answer is, not yet. Here's why. Large institutions are like massive oil tankers. They can't turn on a dime. They need a legal framework, sufficient liquidity, internal education, and solid technological infrastructure before they can enter in a big way. Their entry now is just the beginning, a sort of test the waters. Some are still allocating small amounts, around 0.5 to 1% of their total portfolio, and even that is sometimes in the form of indirect exposure like mining stocks, derivatives, or fund of funds. And this isn't a negative thing. It actually means there is still plenty of room for growth. If these institutions, which manage hundreds of billions of dollars, were to agree to allocate 5 to 10% of their portfolios to crypto, it would create a demand surge that the current market couldn't handle. The issue? The liquidity of the crypto market today isn't fully prepared. If 1,000 large institutions were to collectively buy $1 billion worth of Bitcoin each today, you'd see the price jump by tens of thousands of dollars. But the market wouldn't be stable. The spread is still too wide. Volatility is high, and the selling volume can't withstand the buying pressure from institutions. That's why they're entering slowly. And while they're moving slowly, there's time for us, small investors, retail investors, early adopters, to take positions. Because one thing is certain, institutions may be slow, but once they enter, they won't exit anytime soon. While retail investors can enter and exit quickly, institutions typically lock in for the long term, even up to 10 years ahead. They think in decades, not weeks. So, amid all the news about institutions starting to enter, don't feel intimidated. Think of them as mapping out the terrain, and you're already on the map before they are. They're just starting to put on their running shoes. You're already in the middle of the track. And this is the third reason why crypto is still very likely to produce many new trillionaires. Because the big players are just starting to enter, and we're still in the early phase, when prices are still reasonable and opportunities haven't been eroded by institutional money. Chapter 4. When the world is still hesitant, that's where the biggest opportunities lie. We often hear that crypto adoption is becoming more widespread. And it's true, from large institutions to retail companies, from traditional banks to Web3 startups. Everyone is starting to taste the potential of the crypto world. But there is one fact that is no less important. Global skepticism towards crypto is still very high. Maybe you're currently living in a big city, active on Twitter, subscribe to crypto YouTube channels, and feel like everyone already knows about Bitcoin, Ethereum, Solana, and so on. But try stepping back and looking at the bigger picture. What percentage of the global population truly understands crypto, not just its name? What percentage understands concepts like self-custody, DeFi, staking, or Layer 2? And how many have already allocated part of their wealth in the form of digital assets? The answer: it's still very small. In fact, it's extremely small. In many global surveys, average crypto adoption remains below 20%. In some developed countries like South Korea and the UAE, adoption can be high. But in many developing countries like Indonesia, the Philippines, Brazil, or Egypt, most people still view crypto as online gambling. And this is where its uniqueness lies. Because history has proven, every major innovation, whether it's the internet, smartphones, social media, or even electricity, always begins with skepticism. There are always people who say, it's just a fleeting trend, it won't last, it's useless, or it's too risky. But those who keep believing and keep learning end up being the first wave to reap the rewards. Crypto is still in that phase today. Many countries are still debating regulations. Many central banks are still uneasy about stablecoins. Many media outlets still lump all crypto projects together as scams or frauds. And many ordinary people feel more comfortable keeping their money in deposits or gold because it seems safe. But this is where the opportunity lies. You who are learning about crypto now while others are still hesitant. You who patiently wait for adoption while understanding the fundamentals. And you who have already lived alongside volatility. You will be at the forefront when mass adoption occurs. And don't be mistaken, mass adoption isn't just hype. It's a real, measurable process that gets closer every year. Examples: many countries are already developing CBDCs, central bank digital currencies. Many Web3 startups are securing funding from major venture capital firms. More young people are trusting crypto wallets over traditional bank accounts. Global brands are exploring NFTs, the metaverse, and asset tokenization. Meaning, crypto isn't just a trend among young people on Reddit. It's becoming the new financial infrastructure. And if you're patient, consistent, and learn the right way, you'll be part of the generation that not only understands crypto, but can also build real wealth from this industry before the majority of the world realizes it. Skepticism is a sign that we're still in the early stages. And in the world of investing, those who believe when the majority doubts usually end up winning in the end. It's time to get ready to be part of the new Trillionaire wave. Okay, take a deep breath first, because if you've made it to the end of this episode, it means you're not just anyone. You are part of a minority who truly cares about your personal financial future. You're someone who doesn't want to just be a spectator while the biggest financial revolution of the century is unfolding right before your eyes. We've covered a lot. Why the crypto market is still small in terms of market capitalization. Why the emergence of new narratives always creates huge opportunities. Why institutional adoption isn't an overnight process. And why global skepticism could actually be an early sign of mass adoption. All of this leads to a simple conclusion. Crypto isn't too late. It's just getting started. Is the risk high? Of course. Will everyone succeed here? Of course not. But the opportunity to create generational wealth is still wide open. And only those who are mentally prepared, patient, consistent, and willing to learn will survive until the end of the game. Now the question is, do you want to be a spectator? Or do you want to be a player? You could be the person who regrets it 5 years from now and says, I should have listened back then. Or you could be the person who says proudly, I've already started now. I'm ready. Because in the crypto world, the speed of learning and the ability to endure often matter more than mere luck. And before we wrap up, as always, I'll remind you of the main principle of this channel, the fresh version of Mr. Suw Crypto's 5 rules that you should keep in mind at all times. 5 rules Mr. Suw Crypto. 1. Never use money meant for daily expenses for trading or investing in crypto. 2. Avoid over-leverage. Better to go slow but consistent. 3. Keep the majority of your portfolio in Bitcoin, the rest in altcoins. 4. Always keep cash on hand for unexpected opportunities, the real by the dip moment. 5. Focus on the long-term vision, not short-term FOMO. And finally, it's crucial for me to emphasize. Disclaimer. The content in this episode is created solely for educational and informational purposes. This is not financial advice, not an invitation to buy specific assets, and should not be considered investment recommendations. Always conduct your own research, DYR, and understand the risks according to your profile before making a decision. If you found this content helpful, don't forget. Click like, subscribe, and turn on the notification bell. Share your thoughts in the comments section. I read each one. Share with friends who also need educational insights about the crypto world. I'm Mr. Suw. See you in the next episode. And remember, those who endure, win.